Hey everyone, welcome to another episode of Trading Bitcoin with your host, Tone Vays. Today is Tuesday, October 6th. The stock markets are open and we are going to take a look at the S&P and gold and, of course, Bitcoin. Wait, I got YouTube playing something. Okay, here we go. And yeah, we're just going to talk about price. Don't want to talk about any news. As you guys know, there's a lot of shit going on in the news, but we're going to focus on technical analysis and we will just stick to that. All right, without further ado, let's go to the charts. We're going to start with Bitcoin. Here's the Bitcoin weekly chart. As you can see, if you were not if you were only watching charts and you were only trading, you would have no idea there was even any news going on. Bitcoin has not moved at all this week, and we can see that by this weekly candle. It's only Tuesday. We still have more than half a week to go, but so far, Sunday night doesn't really count. So let's go. Well, I guess it's only been through 2 days, so it's not much. Anything can still happen this week. It's still early. I guess it's way too early to speculate. But so far this week, there has been no volatility. And the weekly chart continues to tell us nothing as long as it stays above the short-term moving average, which I believe is the 20. It is the 20. The 20 period moving average is right here. As long as we're staying above it, we are neutral to bullish. And on a weekly scale, we really need to move above this 11,500, but more likely, just above the prior swing high will be pretty bullish, which is 11,200. Let's we can look at the oscillators. The oscillators are all trending. Well, not all. Sorry, the CMF is actually bullish. The MACD is certainly bearish, and the RSI is kind of neutral. But if we cross below this red line, it becomes very bearish. The weeks are ticking away. The year is close to being over. It would be nice to put 2020 behind us, and hopefully it can't possibly be worse in 2021 for the world. I still think it's possible to get down to the $9,000 area and test this area of support between the 50-period weekly moving average and the upper side of the trend line, which was broken back in July. Here is the daily chart. The daily chart is pulling back this morning. Lots of news before the weekend broke and took Bitcoin down to 10,500, 10,400 even. And it went back up to 10,800 earlier this morning and late last night. But we are still stuck behind resistance and support. So this is a complete no trade zone. In fact, we're basically establishing a brand new channel, but it's kind of hard to draw. I'm not going to draw a higher level channel. You can also, start to draw a symmetric triangle. I guess it can go all the way to there, like something like this, where this area here doesn't come up to the line, which would have been nice. But these three touches look perfect. And this touch, and that touch look perfect. I'm sure other people are drawing this already. I like making my symmetric triangles kind of yellowish to indicate they don't really hint at a direction. You can see it here. This one broke to the upside. This one is also more likely to break to the upside, and I'll tell you why. It's for the same reason this triangle was also more likely to break to the upside, is because when symmetric triangles occur in a general uptrend, they are more likely to break in the same direction of the general trend. And the general trend has been up since March. So the overall trend is bullish. I'm just seeing your questions, guys. Hey, sorry about your car, man. But I mean, it's up to you. I'm comfortable. I mean, I like Bitcoin. I think it's the best asset for me. But you guys have to make your own decisions. There's bearish divergence on a monthly chart. All right, I'll go back to the monthly after. Let's look at the oscillators. The funding rate is totally neutral right now. It's slightly favoring the bulls, very, very slightly, but not by much. It's pretty neutral. The Arun indicator, our very simple breakout momentum indicator, is still showing that the bears are in a little bit of a control. Well, now they are, sorry. So this had a bullish breakout here, and now the bearish one. So this is an indication that this indicator is not really favorable. So right here, it called for a bullish trade on September 28th. What was the price on September 28th? That's September 24th. So we're going to September 28th right here. And that wasn't a great bullish trade. But if you got in September 28th, right now you're a break-even trade if you have not gotten out. Now, the same indicator now calls for a potential bearish trade as of yesterday. However, the crossover did not take place in the vicinity of 20%. I like it in that area. Now, crossing in the vicinity of 38% is borderline for me, whether it's a useful sign or not. You really want it to cross as low as possible. Like this is no good. This 46% area is not enough for me to jump on a trade. So that's borderline, but it's certainly, as a short term, it certainly has you in a profitable trade because this is yesterday and this is today. So yesterday, it suggested to consider short positions. And no matter where you got in yesterday, unless it was like very early in the day or at the worst possible time, this is currently a profitable trade. Try drawing the triangle from a September 3rd drop. From here, it won't matter. It'll be the same triangle. Though, if you draw a triangle from here, you can probably say that you have broken out of the triangle because you would connect these dots. Okay, so if I draw a triangle from September 1st, not 3rd, it presents the indication that we have broken out and are bullish. But here is my only problem with this view. And it goes back to what Tyler Jenks used to say and educate people on. When you have multiple options, always go with the most conservative option. And the most conservative option is to use the bigger triangle. It is the more conservative option. It's the more conservative option on the potential breakout, but it's a more cavalier option on the target. So here's what I mean by that. If we do break out above this triangle, the target becomes the fat part of the triangle, which is a lot bigger if we draw a triangle from mid-August than if we draw a triangle from September 1st. But it's not that much bigger. It's bigger, but it's not that much bigger. So here, the target, so here it's, oh wait, wrong arrow. I need one with a, so here it would be 21%. And here it would be about 30%. Right. So it is a more cavalier target, but a more conservative on when the triangle breakout is. So it's up to you to decide which one. I'm trying to catch this thing at 9. I think it can go as low as 7, but I'd be happy if it fell to 9. It also never has to fall below 10,000 again. I mean, look at all the money printing, and the world is still shut down and people aren't going back to work. So, and a lot of businesses are shut down and they're going to print more money. So, I mean, all of that favors Bitcoin. I mean, the government needs to run a more sound monetary policy. Saifedean's coming out with a book called The Fiat Standard. Can't wait to read that. All right, so that's the daily chart. Here's the short-term look. The short-term look came up here late last night on October 5th, morning for people in Asia, and dropped down a little bit. But here's a MRI support line, and as long as, right, nothing is interesting here from the MRI perspective either. Now, we did complete extension A today, but I don't find extension A all that relevant. This extension A is coming from this MRI top. And we can take a look at where the others are. Just got to flip that to all. And you can see where all of the extensions are. So we completed extension A. Extension B is only on an 8. And extension C is only on a 4 because we need to break above this swing high to get another number in extension C. That's why extension C is usually completes last, because you always need new highs in this case. So the 4-hour chart gives you some support right here at 10,526. Higher off the lows, like here's the MRI bottom, and here's an MRI top. Now, obviously, we went a little higher than the MRI top, but right now, we are right in line with that MRI top. I believe that because we went higher after the MRI top, this is more bullish than bearish. And all we need now is a break of this purple line sitting at 10,900 for a potential upwards break. Tone, do you think the general masses will find BTC a safe haven post-election and for wave 2 of COVID? I do. I do. Not to mention that there's a lot less Bitcoin out there for sale. So eventually, I mean, the stock to flow model, even though it's getting a lot of shit these days, and I was always, you know, I'm not going to comment. I mean, you guys, I've gotten a lot of shit for not being a big fan of the stock to flow financial model. I'm a big believer in a stock to flow concept, And the stock to flow concept does make sense. Here is the GBTC, and GBTC is down to 1104, and look at the GBTC premium. It's only 8%, 8.5%. So that's a pretty good premium on historically looking at GBTC. Gold. So gold is right at very critical resistance. Very critical resistance. Remember, gold is completed its monthly MRI top, and it had a weekly MRI top, and it had a daily extension B and C. So lots of reasons why gold has been bearish for the last month and a half. But gold going back above 1925 would be a very bullish sign for gold. A very bullish sign for gold. I think there's more likely to be rejected here. I always assume that resistance will work and support will work until it doesn't. So the price of gold has to prove to me that it's going to break out. Otherwise, I am anticipating that it's going to fall. Now, I don't have a gold position right now, but my position would become bullish if later this week we are solidly above 1920. But my position becomes bearish if we can't break that number. This is a very critical support resistance line. I mean, technically speaking, this is a descending triangle, and gold never got to its target. Its target should have been a 9% down move, which it never did. This is why I was looking for 1750, but it never happened. It got halfway. So if gold can break above that line, then I become bullish. Right, this line is the old high of gold. It's been, if I zoom out, I should probably go to a weekly chart. If I zoom out, that is the prior to the 2011 all-time high. That's this line. That's the same line. It just happens to be not only the 2011 high of gold, it also happens to be the support line on the daily chart for all of September. Well, August and September. All of August and September, it was the support line until it broke in mid-September. So it just happens to be the same line. What kind of tea today? So I still have, I mean, I drink Harney and Sons. That's like one of my favorite teas. This is coconut green tea. Thanks for asking. All right, guys, I don't want to keep these videos too long. I'm trying to make them shorter. We do have 400 live viewers. Here is the S&P daily chart. The S&P daily chart has broken out of its okay, so that was the prior all-time high for earlier this year, and we are back above that. That doesn't really mean anything on its own. The break of this red line was key. This line isn't all that important. In fact, I should probably remove these Fibonacci lines. The only reason why they're there is for the Fibonacci extension, which is very far away. And I no longer need this, actually. I'm going to delete it. It's no longer relevant. And neither is this. Though this was relevant. Look at the perfect support off of this prior swing high that bounced the S&P back up. Hindsight's always 20/20. Now, if we pull back here one more time to the red line, that is definitely an inverse head and shoulders, potentially setting us up for good upside. And right now, we are still in extension B. And extension B would need to get close to the top in order to complete. And this is something I'm going to talk about on the workshop this Saturday. A few people have joined, And this is where I'm going to discuss the MRI and how all of these features work. So as of right now, I'm bullish the S&P as of right now, as of today. Ever since we broke this red line, it has this bullish posture. It can still complete, but now we're going to get close to this double top, and the guys know what I think about double tops. So I think that all this money printing is going to continue to rally the stock market. Always been a big bull on the stock market. This COVID stuff really, like, it's bad. Like, it's not even COVID, to be honest. Look, I'm going to get a lot of shit for this. COVID itself, I don't think is, I think the reaction to COVID is grossly overblown. But the danger itself from COVID was probably, it was an overreaction. Yes, people get sick. Yes, unhealthy people are at risk of dying from COVID. But like, I don't think anything solved it. I think the shutdown of the economy has destroyed more lives and cost more lives than COVID ever could have as a virus. I think the reaction to the virus was a lot more dangerous, not only in the present, but more importantly, into the future. The reaction to COVID will plague humans for at least 2 to 3 more generations, if not for the rest of human history, because of the freedoms that were lost. And meanwhile, the threat from the virus itself did not, in hindsight, of course, came nowhere even close to justifying the global reaction to the physical medical threat of COVID. That's my non-professional opinion. Oh yeah, guys, I'm kind of down to like 5 mods right now. I kind of messed up on that. And there's so many less people watching these days. We're letting comments go and see how bad it gets. And then I might add more moderators back in. There's also no slow mode or anything like that, so everyone can still comment. Well, I'm not gonna. I wouldn't say. Okay, we're getting political again. I'm not gonna say that the kids are gonna be much dumber. I'm not gonna say that. I don't think they'll be dumber. I don't think it's I don't think it's intelligence. I don't think it's IQ levels. I just think that a lot of kids are gonna be like their development was ruined. I don't think it's. I don't think it. I'm not sure, like medically, maybe or maybe not, it affects their intelligence, but I don't think it should. I have no idea. It probably should not affect intelligence as much as, brainwashing in a way. All right, so I'm still bullish the S&P here. I don't see anything in the chart that scares me. So let's move on. Here's the weekly S&P. The weekly S&P is really challenging the all-time highs. You can see how the weekly S&P hit an MRI top right at the top, and we took a hit down. And this has been a crazy year. This has been a yearly top in the MRI as well this whole year. So I don't know how helpful that is, but it's there. Okay, so everyone's asking about a couple of tickers here. Under Armour. The question is, am I still in Under Armour? I actually am. It's like the only stock I have. And I don't because it's just a position. It's actually not, it's making me money, but it's just crazy. I don't understand. Here's what I fall short as a TA guy. I made the right bet. I chose the wrong stock. because my view was sports is coming back, COVID or not. By the way, this is how I know COVID's not dangerous. If COVID was dangerous, there'd be no sports. All the sports are back. So it can't be that dangerous. It's a very simple Occam's razor view. If COVID was a threat to society, there would be no sports. There would be no football. There would be no basketball. There would be no guys hitting each other, touching each other. It really is that simple. I don't understand how you can have two completely contradictory thoughts in your brain. COVID is dangerous. You can't speak to people and you can't be 6 feet away, but you can go and play basketball and jump all over each other. It doesn't make it completely like makes no logical sense whatsoever. So either it's dangerous and everyone's in a bubble, in their own bubble, not in a bubble with 1,000 other people, or it's not. It's one or the other. So here's the thing. Look at Under Armour. Under Armour's biggest competition is Nike. So let's look at Nike. Though it's debatable if Under Armour is competition for Nike. All right, why am I not going anywhere? Okay, so here's Nike. So Nike is above its all-time prior high by 23%. So it's above the January 2020 high. But here is Under Armour. So you see that? So it's the same play. It's the same idea that, hey, sports is going to come back. These stocks that profit from sports should recover nicely. Look at how well Nike did, and then look at how poorly Under Armour is doing. I personally don't like Nike stuff. I like Under Armour stuff. So maybe it's personal bias. Like I have a bunch of, like when I was playing sports, I was always using Under Armour. I just like their stuff better. I like their clothes better. I like their brand better than Nike. But so I've always been a fan of Under Armour. I'm just not a big fan of Nike. But Nike is clearly doing something right, and Under Armour is not. I mean, it's that simple. So the thought process was fine, but Under Armour just didn't recover. I didn't look into the fundamentals of it. I mean, the fundamentals is looking at like how they're doing sales wise and stuff. Whoa, a lot of comments in the chat. Hey guys, moderators, if there's anything, the 3 moderators that are left, if there's anything interesting in the question wise, can you just throw it into the group? Or is everyone just arguing over COVID? So, okay, so there you go. So it was, I mean, it's just disappointing, right? It's just disappointing. I never get upset over missed opportunities. Any profitable trade's a good trade. I mean, Under Armour is a profitable trade, but it's very disappointing considering how well Nike did in the rebound, but not Under Armour. At the least, I expected it to recover back to the February highs, which would have been, a tripling of the price because it fell from 20 down to 6. So that's 3x from there. All right, DraftKings. Well, again, sports. It's all about sports. DraftKings is doing well. Had a huge day here. A couple of pullbacks. We are in an MRI top, so be careful. And also, we are getting close to a weekly top in a couple of weeks. So let's see if this means anything. I still think it's pretty bullish. I think it can use a pullback. If DraftKings pulls back, this is an obvious pullback target of 45. But there's no reason not to be. I mean, people are dying for sports and dying to bet on sports. And what was the other one? Tilray. Tilray hit a weekly MRI bottom the other week, and it popped nicely. So Tilray is doing well again. There it goes. There goes Tilray. Nice weekly MRI bottom right there last week. So again, if you know how to trade the MRI, and I am going to be teaching a workshop this Saturday, if you know how to trade the MRI, this could have been useful. Weekly MRI bottom. Yeah. Let's see what else we got. Oh, monthly divergence, people asked. Okay, last thing I'll look at. Here's the monthly chart. So let me just look at the chart real quick. So divergence with what? So here is the RSI. I don't really see any divergence with the RSI. Because, well, we did have a higher close. It was a slightly higher close, and we haven't really fallen much. So, I mean, to really have divergence, you need to make a new high over the 2017 highs and have lower readings on RSI and MACD, which can happen, but we're not there yet. So I don't really see divergence. I'm not a big fan of monthly divergence anyway. It's not, I don't see how it's tradable. Weekly and daily are much more useful. Square. All right, last thing I'll look at is Square. Square is topping based on extension C. And, but however, its MRI daily top did not do anything. And we're now trending higher. So I would use this as a little bit of a caution. But if we start trading higher tomorrow, I think I'm fully bullish on Square. The weekly chart is not close to an MRI top yet. So we have a lot further to go. It is ending extension B, but Square is just in a massive uptrend. I don't see it slowing down. You know, these are all your warnings to take some profit, but C, A, B. So the C came first. This is all coming from here. There are no more extensions on a weekly scale. This was the last one. A red 2 does not kick off any extensions. Extensions can only happen off of MRI tops, only the first MRI top, not the second consecutive MRI top. So there will be no more extensions. It has exhausted all weekly extensions. And if it still trades higher, then that's the trend. Not every indicator works perfectly all the time, right? Like here, it did a perfect job calling a top, perfect job calling a top, perfect job calling the bottom, perfect job calling the bottom. Here's extension A. I'm not a huge fan of these, or at least I don't take them as seriously as other markers, but it certainly did a good job on a weekly scale. Like the MRI was certainly useful, Getting out with a profit is never a bad idea. Could have gotten back in on this candle. This is why I will also be teaching these green stars. So, I mean, this is how I set them, but people can set them in other ways. You'll see a green star here, right there. The green star tells you that the trend is still strong after an MRI top. It's probably a good idea to get, well, and it's possible to get back in the market. So yeah, that green star would have gotten me back in. This green star would have gotten me back in too, but this red C would have gotten me out. And then you had this A, and then you had this green star getting you in. And right now this week, a little bit of a caution flag here. So it's up to you. You can wait for all of this to play out and see if it's still going higher. Or if you already did well and made a bunch of money on it, just go find another stock. Don't get married to a stock. All right, I promised Square was the last one, but we can look at Space. After that, I gotta go. All right, here's weekly Space. Looks bullish-ish to me on the weekly. The green star is there. Here's the daily. Like, this indicator could be very clean or it could be very busy. So this is very busy. This is me having everything turned on. But here it is, very clean. And it looks like this. So it's really up to you how you want to display it. This is the default view of the indicator. This is the default view of MRI. It's clean. So it's bullish. I mean, it's I'm a big fan of trend. Momentum. Boom. You break the prior swing high. It's the highest price we've had since August on a daily chart. We're challenging the prior swing high. So I'm bullish. That's it. All right, guys, that is it for me. Please check out the upcoming workshop this Saturday if you're interested in the MRI. Everyone that had the older indicator should have access to the MRI. Just go to your invite-only script to add the MRI to your chart. If you have access to it, you go to scripts and you go to invite only, and it will be there. It will be somewhere there. Right there, momentum reversal indicator MRI by me. Only 137 likes. No one cares, which is fine. You can put a star on it. You can favorite it, whatever you like. Okay, if you have access to it. If you don't have access to it, you can join the workshop this Saturday. No comments about what the UK is doing. Look, it's unfortunate. As you guys know, I'm a big fan of personal financial freedom, and I hate scammers. So I hate people that scam you for their personal gain. But I'm a big fan of your financial freedom and your financial privacy. So you guys know my views on it. I don't believe the government should tell people what to do with their money, but I do believe the government has the right to, well, maybe not have to, that's a bad way to phrase it, but I do believe there needs to be regulation on those that are taking your money. If you are taking someone else's money for whatever reason, whether you're holding it for them, storing it for them, if you are managing other people's money, if you are investing other people's money, if you are taking other people's money for investment, you need to be regulated because you are now responsible for other people's money. But the person that if it's his own money, I feel that the regulation on your money is ridiculous, but the regulation on the people taking and soliciting your money is bullshit, or not properly managed, or not properly enforced, or not properly handled. All right, guys, that's it. I'm going to close this. Thank you so much for watching, and I will see you all on the next one. Bye, guys.